Now tax season is underway, and as always, there are changes to the filing rules this year. From new tax breaks to higher deductions, the differences could impact how much money you get back. Financial professional Brian Levy from BML Wealth Management is here to explain what changes that you need to know about. Brian, good morning. Good to see you.
Morning, Adrian. Good to see you.
All right, so first off, the IRS came out a few days ago and urged Californians to hold off on filing their taxes until it can clarify whether those tax rebates that many of us received are taxable income. What can you tell us about that?
Yeah, they did. So if you're one of the 60% of Californians that received those relief payments, they're urging Californians to hold off because we just don't know yet if the government, the IRS, is going to tax it. We know that California won't tax those payments, but the government is still just trying to figure it out. You know how the government is. So they don't want you to file and then after the fact have to file an amendment because now you have to recognize that taxable income. But I will say, Adrian, it doesn't mean that you can't start planning for your taxes. It's very different. Tax planning versus tax preparation is very different. So I still urge you to be proactive with it this year.
So should we just hold off and wait or just try to go for an extension? What would you think?
I mean, I don't want to say everybody should file an extension, but certainly they should come out with a ruling before the actual real file date. So I would just kind of wait and see, but I'd kind of get like everything prepped and ready to go.
All right. Thank you, Brian. And what are the big changes that filers have to be aware of this year?
So I think the big one, Adrian, is that the pandemic benefits that we all got, right, are sort of gone at this point. So the 2020 and 2021 major tax changes are gone. So the child tax credit is going from $3,600 down to $2,000 per child. And then if you remember, I mean, the hardest part about the pandemic is everybody had their kids at home. So they were working. They had to pay for dependent childcare. So that's going from a credit of $8,000 to $2,100 if you have two kids and you have to put them into child care while you're working. So it's a huge difference between pandemic benefits in terms of tax credits. And remember, tax credits are dollar for dollar. It's literally like money. It's not a tax deduction.
Got it. Are there any changes to the standard deduction that we should know about and inflation affecting tax brackets?
Yeah, so the standard deduction is also increasing. It's like you had mentioned, it's inflation based. So if you're a single filer, Adrian, you get $900 more of a tax deduction for 2022. Remember, we're talking about last year's taxes, and it goes up to $1,800 as an additional deduction for a married filing jointly couple. But you know, remember, pay attention to your withholdings because as things change, you don't know if you're going to over withhold or under withhold. I always tell people at the start of the year, just figure out how much money's coming out of your paycheck. Is it the proper amount? Because a refund is just ultimately an overpayment of taxes, a free loan to the government throughout the year.
Yeah, the goal, Brian, right, is always to have like zero, right? No refund. Yeah. You don't want to pay either, right? But
exactly right.
Yeah. All right. Brian Levy from BML Wealth Management. Great to see you. Thank you very much for your advice this morning, your insight. We appreciate it.
Absolutely. Thanks, Adrian.